All right, guys, we are here today. Good morning. We got Jackson Hole Symposium at 10 a.m. I'm expecting, honestly, markets are going to be pretty muted for this report, genuinely. I think markets will probably be sideways. We'll see. I don't know, but I'm expecting markets are going to be a little sideways from this report. We'll see what happens. Wait, did we start? Can y'all see? Can y'all hear me? Hold on, let me make sure. We're not doing some other stream right now. Hold on, let me make sure. Yeah, we're doing it. Okay, we're watching. Okay, we're live. Other stream right now. Hold on, let me make sure. All right, yeah, we're good. Okay, yeah, I don't know why it said we weren't started. The chat is like updating slow too. What's up, Aldrin, Pond, Freddie, Ryan, Matthew, Beer, MJ, 2A, Robert, Fox. What's up, chat? Let me know if we're coming in straight. Hey, what's up, Ray, D, Crypto, Charlie, BT. Oh, let me drink some coffee. But yeah, the Jackson Hole Symposium at 10 a.m. NASDAQ is honestly rebounding a little bit from where it was. Like it ended up dropping a lot early this morning, all the way down to like 2374s, and it's kind of bounced right back. It's kind of bounced all the way back up already. Yeah. What's up, Brian? Meeting's gonna start in 3 hours. What's up, D? Hey, what's up, Beach Bum? Axel. Yeah, so again, just let's take a look at some stuff this morning, okay? First thing I want to look at is yields. Yields and interest rates follow each other. So if the people expect Jerome Powell to be hawkish, yields should be higher today. Let's take a look. And they are a little bit higher than they were yesterday, I think. But yeah, look. So again, people are expecting Jerome Powell to be hawkish. Here's where the day started. Right here. Actually, no. Here's where the day started. And you can kind of see we're basically where we were yesterday. Here's the previous day here. Yesterday, we actually went up a lot more. And again, I think this is just people getting baked into a hawkish Powell. And then today we're still elevated. We're at the top of the range. We're at about 4.33% for 10-year yields, which does show a little bit higher interest rate sentiment. If we take a look at actual rate cut odds by the Fed Watch tool, which kind of mirror this, less than 70% likely that we cut rates, according to most people. But it's still pretty probable. It's 70-30. But again, less than 70. It's 69.3. So it's still looking like... yeah. It's still looking like we're going to get rate cuts, but it's not certain for sure. You can see the VIX is at 16.5. Taking a look at the SPY today. SPY is slightly elevated. We got the Q slightly elevated. NASDAQ slightly elevated. Gold, on the other hand, here is at 33.70s. It's down a little bit. So I'm going to do a poll right now. Yeah, I think Powell's going to be ambiguous. I agree. I think he's going to be hawkish, data dependent. Not really hawkish, but more so like unwilling to commit to any rate path is what I think. He's going to be neutral. All right. Yeah, will Powell have a hawkish or dovish tone? Will it let me do this one? Let me see if it'll let me do this one. Yeah, that looks too much like a dove. I gotta go with the other one. Alright. I'm trying to do a poll. Alright. Here we go. Poll is now live here. Will Jerome Powell have a hawkish or dovish tone today? You can vote on that as well. Again, today we had UBS raise the S&P targets on strong earnings. UBS lifted its S&P 500 targets while keeping a neutral stand on U.S. equity, citing strong Q2 earnings and improving economic conditions. New targets is 6,600 by the year end and 6,800 by June of next year, up from prior forecasts. EPS outlook is now 270 for 2025, which is up 8%. and 290 for 2026, up 7.5%. Current level of S&P is at about 6450 as of Monday. But again, today is Friday now, and the S&P currently is sitting around 6370s. But again, we're up a little bit today, so that's about right. We're still really close to the range they had on Monday. Despite the optimism, UBS still remains neutral, warning that reduced tariff risks are already priced in and buying could slow. Upside scenario 7,500 if tariffs ease, geopolitical stuff stabilizes, and AI delivers faster gains. Downside is 4,500 for June of next year if tariffs cause a recession or global tensions get worse. So that's what UBS thinks about the S&P 500 right now. We can look at the E-mini. E-mini's at about 6,400 for the S&P E-mini, so you can kind of see where that's going. You can look at the SPY as well. Both of these things reflect the S&P 500 futures, right? The SPY and the E-mini, S&P E-mini. So looking at our poll so far, we got almost 100 votes. 64% are hawkish, 37% are dovish. Yeah, protagonist, if you're just going to plug a bunch of random crypto stuff, next time you're just going to get banned, brother. Fair warning, sir. Well, one's the upside if things go really well, and one's the downside if things don't, right? Yeah, today's Jackson Hole Symposium, we did a couple shorts and stuff about this, but today's important. And it's important specifically because, today's important specifically because it's the first time we're going to hear from Powell after a lot of contradictory information. So on one side, we had big labor report revisions, 258,000, and they're expecting more to show up early next month as well. Not only that, but we also have higher jobless claims yesterday showing more people filing for unemployment. We've seen a lot weaker signs in the labor market over the last 3 weeks. And so that's one side of the spectrum here. I don't know why my alarm keeps going off, bro. Hold on. Oh, it keeps getting snoozed. Bro, I don't want it to get snoozed. I'm gonna turn all of these off for now. Alright. And that's on one side. The weak labor report is on one side. On the other side of it, we had a massive PPI inflation reading that was really hot, really high, showed a lot of inflation, almost 1% growth to a PPI inflation wholesale prices month to month for both core, which excludes food and energy, and regular PPI data. And so that's the other side of it, And so today is going to be the first time we hear from Jerome Powell since all this data has kind of been thrown out into the world. And we're going to see what Powell might do. At this point, we're 70-30 still for rates. Like I said, I showed you this a little bit earlier. At this point, we're still 70-30. But Powell's tone today could swing these, especially, of course, like yields. And it's going to swing all this stuff wildly if he comes out more hawkish than expected. And so what is not discussed enough is that the Fed was hiking rates while it initiated quantitative tightening during the 2017 bull cycle while the global money supply was soaring, driven by a yearly downward trend in Dixie. Yeah. Yeah, I mean, a couple things. Like, if Jerome Powell doesn't cut rates and we enter a recession, people are going to blame Powell for it. And I don't think he necessarily wants that as his, legacy. You know what I mean? So I don't think he's going to let it get to his head too much. But yeah. Yeah, the president on the other end, obviously, wants a rate cut. I think you could probably argue one at this point in time. And again, like I said yesterday, I've said this many times, I'm a big believer in balance, right? So I think we could cut rates 25 basis points, or I think we could end quantitative tightening, which is a dovish thing, helps bring interest rates down, especially if it's if we end the MBS. One of the big complaints is mortgage rates right now are high, and it's stopping people from buying homes and causing all these problems, people say. But then they also turn around and complain about house prices, and bringing interest rates down is going to make house prices go up, probably not down. But with that said, ending QT on MBSs and QT in general would be a balanced act as well. So We'll see what they do, but I expect them, regardless of what happens today, I expect them to either end QT sometime soon or do a 25 basis point rate cut. And again, I'm not very partisan. Like, I don't really root for either political side. You can't really knock the president for wanting like a thriving labor market, you know. The cost is inflation sometimes, and so it's not like it's without consequence, but yeah. All right, right at this 200 exponential, I think we might trend sideways, but I'm going to take a small little shot here at right around the 200 exponential. Try to take a longer term trade. I might add into this down to 50. We got a whole dollar at 50 as well. So I'm going to try to take larger trades here. Yeah, gold's kind of shutting down here. I'm going to say dovish because inflation is going up from tariffs anyway, so expedite the house stuff. Jobs are abysmal, so it's a double. Yeah. Yeah, but in that context, like, if you can avoid a recession, maybe if we, you can avoid a recession if we are proactive about it. You know, like, we haven't seen like that big of cracks. It depends on how much the revisions are. I think one of the more important things after today is going to be what kind of revisions do we get at the labor report early next month in September. I think that's going to matter a lot in terms of where we're heading with labor market weakness, as well as, you know, everything else. He's not hiking rates. I'll tell you that. He's not going to hike rates. He's not going to hike rates just because of the labor report revisions and the weak labor report that we got. He's not going to hike rates. That's basically out the picture. Nobody expects that, and it's just not something that's really reasonable to expect at this point in time. I mean, I know he said last time we're lucky we don't hike rates, but I think he's just kind of justifying pausing more than actually threatening to raise rates. And so, yeah. Does a rate cut make the price of bonds go up? Yes. Yes, it does. It'll make yields go down because yields and interest rates follow each other. So yields will decrease on a rate cut, and the price of the bonds will go up. Supply and demand, really, you know. Yeah, both sides have an argument. I get it, for sure. And that's why today's speech, everybody's kind of waiting on it. It's certainly a little bit more polarized this year than it was last year. I covered this last year, but this year it's definitely more polarized than it was. You know. All right, we're green here. Let's see if we can get a push up here. I was kind of betting that we hold at 250. United Health went all the way up to 316s. Back down to 305s now, but it's still trying. Well, dovish means loose monetary policy, meaning like, hey, we're going to stimulate the economy, we're going to try to bring interest rates down. Hawkish means restrictive, meaning we're either raising rates or we're pausing rates at restrictive levels, right? One is low interest rate pushing, the other one is high interest rate pushing, you know, and the reason we'd want higher interest rates is to control inflation. We push the economy and, you know, stuff down, and people spend less, businesses expand less, they spend, inflation dips. That's kind of the goal of a hawkish Fed, is to combat inflation. But really, the goal of the Fed is to maintain both. You know, they have their dual mandate, which is price stability, low inflation, and a thriving, robust labor market. Well, it depends on where they're pausing, but yeah. Well, I wasn't actually responding to you, Charlie. I was responding to R right there. You're right, I would say. I mean, it's somewhere ambiguous. Like, we could pause rates at, hold on. All right, I'm going to cut half of this out up here. Probably cut the rest of this up here too, just because it's really early in pre-market. I'm just trying to lock in some of this profit when we get such a big spike, and I'll probably hold the rest of this break even. But look at that turn here, man. We spiked up there quick and then turned all the way back down here. Let me see if this is news related. Maybe it's Indian deposit growth rate numbers. Yikes, and now we're down. I'm gonna cut that there. So we got out flat, but is the Indian data really influencing the market this much? We got India deposit rate growth at 10.1%, loan growth at 10.2%. Roblox is upgraded at Wolf Research, Gap downgraded at Barclays. That's a weird move here. We did hit the 200 exponential. Maybe I could buy this up some. Well, I guess it's too late for that. Hawk just means restrictive. I wouldn't say it necessarily means raising rates. Like, if we raise rates to really high levels and then pause them there, I would say that's hawkish too. Should have bought it. Yeah, I mean, I could have, you know, it's all good. I might look for a little dip here and buy it if we get it. Might start in here. Alright, guys. We got almost 600 here at 6:30 in the morning. Hey, you love to see it. 7:30 in the morning, market time, but still. Yeah, I mean, a lot of people are going to yell stagflation. Well, he's not going to end quantitative tightening today, I don't think. But if he did, I think that would be a... If he did, I think that would be a more bullish thing for markets than him hinting a September cut. But either of them is probably positive for markets. All right, so we're up a little bit. All right, now we're down a little bit. Let's see if we can add to this. Might add a little bit more to this. Take another little swing down here. And then see if we get a pop up now and move up. Yeah, I mean, so somebody's asking whether ending. And now take my trades off of the microphone. Somebody's asking about. All right, I'll probably have to cut this now. We're getting some more volatility than I'm used to in these last few candles here. We'll cut most of it, I think, down here. It's kind of been a back and forth week. But no, so I would say it depends on whether starting to cut rates signals like a full easing cycle coming out. 25 basis points is a relatively small cut. But if it means that we're going to continue to cut for meeting after meeting after meeting moving forward and start an easing cycle, then that can be an optimistic thing, right? But it also depends on like what you're looking at. Ending QT is good for long term. Ending QT is good for long-term yields, right? Like longer-term interest rates, like mortgages, and other like longer-term loans. Cutting the federal funds rate is cutting short-term loans like home equity lines of credit, and you know, if you ever hear like adjustable rate loans, the rates that they're adjusting, you know, are directly influenced by the federal funds rate, right? So it depends on what we're looking at. Both of them are dovish things. One influences long-term yields more. But I would say QT might be a little bit more important if we're just going to do 125 basis point cut. But if we do more, it depends. Yeah, I don't think we should do QE at all right now. I don't think we should do QE at all. We got the Christmas music going in August, guys. Bro, my phone never shuts up, dude. All right, so the Russian Foreign Minister Lavrov says no meeting between the two presidents is planned currently, but they're ready to meet him when a summit agenda is ready, according to RIA. Oh, I'm still in this trade, dude. I completely forgot I was in this. Hey, thank you, Sam. Can y'all hear my phone go off anymore? I changed my mic setting, so you might not be able to hear my phone go off anymore, but maybe you can. I hope a US-China deal is on the cards. That'd be good for markets. And the markets might need that right now. Yeah, Jackson Hole Symposium today, 10 a.m. Eastern. 10 a.m. Eastern time today. Be ready. It's a big day. NASDAQ, S&P, still elevated today somewhat. Yields are up slightly, but they're more up yesterday. Rate cut odds are 70-30 as of now. All right, so we're under the 200 exponential. SPY's pulling back some. If we take a look at like Nvidia today, guys, here's Nvidia on the top right. Nvidia's down to 170s here, so Nvidia is a little bit weaker than it has been over the last couple months, but it's at 173 as of now, which is good. I mean, it's still up a lot. NASDAQ, I expect the NASDAQ to be choppy, so I will attack a sideways range leading into this report, unless we get like big breakdowns and stuff like that. If we get big breakdowns, I don't know what I'm gonna do, but it depends. Like if we get, we'll see. If we get big breakdowns, we get big rips up, I'll probably be a little bit more cautious. But again, as of now, my plan for the day leading into Jackson Hole at 10 a.m. Eastern time is to just play it safe, play it smart. I think we might get chop leading into it. So we'll see. We'll see. All right, guys, NASDAQ rejecting that 250 level. We're still looking at news coming out. Still a little slow, but hey, we have some stuff happening here. Let's look at our poll options. Our poll is still showing 64% of people thinking Powell will have a hawkish tone. Yeah, so we got Labor Day on the 1st. Is that an actual market day? It's got to be, right? It's always a Monday. Yeah, so September 1st is Labor Day. NASDAQ is chopping. I expect us to get chopped. Maybe I'll attack a choppy oil trade. I think that kind of makes sense. A sideways like oil trade. What do you guys think? Oil? I expect to get choppiness, Philippe. He says, what's the best day trade? But again, remember, guys, I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Don't copy me. Where's Palantir at right now? Look at all this stuff on screen. Understand it. I can't guarantee anything. Don't copy me. With that said out the way, not an investment professional. Understand CFTC 4.41. Remember, I might be terrible and have no idea what I'm talking about. Not an investment professional. With that said, look at Palantir, man. Palantir still sitting in the 150s, man, after this big dip down. I mean, most people expected Palantir to correct eventually. The big question with it is, does it make a rebound back up? Is this the end of the correction? Does it find a bottom at 150 and rebound? Or does it continue down, correcting big and having some squeeze on the downside? Let me know in chat which one. What's up, Arrow? You know, listen, I've seen some videos about Cowboy Cerrone and cave diving. I'll tell you this. Y'all are not about to find me in a cave, bro. I'm claustrophobic, dude. That's the last thing I want to do is go swim around in a cave underwater, dude. I'm good on that. With all due respect, it seems dumb. I am not about to go cave diving. No offense to you if you do it. It just seems like a completely unnecessary risk. It's not even something cool like skydiving, you know? Like, let me go swim around underwater in a really claustrophobic cave. Why would I ever want to do that, bro? You know? So majority thinks we're in for a pause. I don't know. I would say the majority of people think we're still pretty probable 70-30. These are based off of yields, which are basically people's opinions. The market. This is the market right here. So at this point, most people still expect a 25 basis point cut. But it's shifting, and it has been for the last 2 days leading into Jerome Powell. I think Jerome Powell might be hawkish and restrictive. I've said this all week, and you know, I think he might be hawkish and restrictive. Yeah, I could see that. No, he'd never be up for that, Sam. I did see the Jackson Hole cave diving thing. I've heard Jackson Hole is really nice, actually. All right, so Nvidia again is pausing H2O chip production. Meta agreed to a deal worth at least $10 billion to use Google Cloud. ZM is up 5%. EPS and revenue topped alongside raising the fiscal year outlook and some other stuff. But again, I think Nvidia is actually, wait, let me see. Yeah, VWAP's actually red about 1% right now. Yeah, it's at 10 a.m. I'll put a timer a little bit closer to it. Yeah, it's at 10 o'clock. Yeah, so again, Nvidia is asking suppliers to halt H2O production after Beijing urged local companies to avoid using the H2O chip, the information said, referring to a chip designed specifically for the Chinese market. A production suspension would raise questions about fundamental demand for H2O, a less powerful version of their cutting-edge AI accelerator. So, also, the president said he got, quote, very angry after Ukraine damaged the Russian oil pipeline that supplies Hungary, according to Politico. We got some foreign policy news. If we take a look at oil here, oil's down today. Oil's down. I kind of want to short oil, but kind of think we'd rather buy the dip in gold. Thinking about it. Yeah, I did see Meta stopped. Yeah, inflation's high, man. Again, we covered this last week. But PPI inflation showed a shockingly high number. Shockingly high number. Okay, so Morgan Stanley said CPI and jobs data, not Jackson Hole, will guide the Fed. Morgan Stanley said U.S. monetary policy will hinge on upcoming inflation and labor data rather than the Fed commentary at Jackson Hole. The bank argued payrolls overstate labor market weakness due to population shifts, noting other indicators like hours worked, incomes, hiring, layoffs, and unemployment show balance. July's rebound in hours worked signals demand is re-accelerating, while strong compensation supports the outlook. Payrolls break even have fallen from 210,000 per month last to 130,000 this year and may drop to 70,000 by the end of the year. Morgan Stanley expects the Feds to hold rates in September, though it sees the decision as a close call. Yeah, I think PCE is going to be incredibly relevant as well next week on Friday. PCE inflation's big. Yeah. Do you agree with Morgan Stanley? Do you agree? Yeah, hit the like button, guys. Hit the notification bell. Yeah, there might be big yellow scrolly letters at the bottom of the screen. I'm not saying there is, but there could be big scrolly letters at the bottom of the screen. Let me fix them, by the way. There you go. That's a little bit cleaner. Yeah, I'm not saying there is, but there could be big scrolly bright yellow letters that tell you exactly what time the Jackson Hole speech is. So all right, guys, we're at 23,250s right now. 23,250s. Where's Bitcoin at today? Bitcoin is all the way down to 112s. Low of this month right now for Bitcoin. Bitcoin's at the lows of the month. At 112s. Looking a little weak. Oh, yeah. John the Kind. That's me. Nasdaq's ripping up a little bit. Maybe we should have held that long position we had. But that's all right. It's time. Chat, it's time. Again, some news that dropped this morning. Let's just cover a lot of it here. Okay, let's just talk about it. Stock futures are slightly higher, although Nvidia's down after halting H2O chip production. Most markets are waiting for the Federal Reserve Chairman's keynote at the Jackson Hole Symposium. Traders are eager for forward guidance on interest rates for next month in September. The probability of September cut has dropped. It's down to currently 69% right now. Ahead of Jackson Hole, which basically means traders expect a restrictive Powell, refusal to commit Powell is essentially what I think we'll get. The 2-year Treasury yields have been climbing as hawkish signals from the Fed often dampen expectations of easing next month. Stocks to watch today, we got Intuit down 6%, bad guidance despite good Q4 numbers. Workday, WDAY, is down about 4 to 5% despite solid earnings due to a cautious outlook. We got Zoom is up 5% after beating expectations and raising guidance. Ross Stores up 2 to 2.5% on strong back-to-school sales. And Nvidia is down 1% today, roughly, as reports indicate a pause in H2O chip production because China is basically discouraging people from buying H2O chips, showing lack of demand there. Again, with trimmed chance of a Fed rate cut, markets are cautious today. I think we might get choppiness and sideways, small diluted range. Futures are muted as well. S&P 500 is sideways over the last couple days as well. China Shanghai stocks are hitting decade highs amid optimism in tech, though. Dollar is strengthening, particularly against the yen amid persistent inflation concerns and hawkishness by the potential speech today. You know, again, we've talked a lot about quantitative tightening and what that might mean in markets. Of course, I think ending QT would be pretty good. I don't think we should commit to printing, though, with QE. I think we should end QT. But I don't think we're going to do that either necessarily today or next month. All right, yeah. In about 8 minutes, we got the 8 a.m. numbers coming out. Hopefully Powell's nice today. The president, yeah. President, if we don't raise rates next month, the president's going to freak out. So y'all be ready. I'm ready. We've taken a couple trades today. We'll keep trying. We'll keep trying. I might buy another dip here, but again, I think we could also have chop. We can get in something. Yeah, you can see gold. Gold's kind of muted. Looking at our poll numbers, we got almost 600 votes. 64% are hawkish for today. 36% are dovish for the speech today. Yeah, QE will mean inflation, certainly, you know. That's why, like, you got crypto people pushing for QE. Like, y'all are basically saying, hey, give us inflation so that Bitcoin goes up or altcoins go up or whatever, you know. And, like, the issue with that is that inflation hurts everybody. Doesn't matter what you do, you don't like inflation. Nobody likes inflation. It can sometimes signal some economic strength, but nobody likes inflation right now after the last 5 years and everything. Nobody wants more inflation right now, except for the crypto people who are essentially pushing for money printing to support Bitcoin, which is a horrible idea. You know, like if Bitcoin goes up, but you're paying 30% more prices, 20% more prices, 15% more prices, is that really a win? Is the question. I don't think it is. I guess it depends on how much Bitcoin you hold, you know. All right, we're gonna buy this dip, see if we get a pop back up. Again, that's the question. If Bitcoin goes up, but so do prices, is that really a win? For all coins, yeah. All right, we're in this trade. I'm looking for a slight upward move, but again, we could certainly just get choppy. I'm hoping we get a rebound back up to retest 60 and 65 is what I'm looking for, but yes, it is. We don't need things, just Bitcoin. Yeah. Yeah, I'm looking at Microsoft today. A lot of stuff is actually up this morning. We're kind of just stagnating though, bro. Like, honestly, I'm gonna cut a piece of this right here. I just don't like this at all. It's just not really doing anything. It's taking too long. Like, very rarely will you see a candle actually freeze, and we're seeing that today, unfortunately. We're trading pretty small today, though. I mean, we're not really taking big size. These are micros. Yeah, I'm going to pivot to just chop. Like, I'm going to attack chop, because that's all we're getting today, man. We're not getting anything good. I'll probably just wait till the opening bell. Maybe I'm trading a little bit too active this morning. We'll maybe trade our other account here and start with like a green slate, but we'll see if the 8 a.m. scrum brings anything good, you know. Yeah, Jerome Powell, I get it. Maybe we can attack some choppiness in gold. If Powell is hawkish, we'll see what gold does. Here's gold. Look how choppy gold is. I kind of want to buy the dip in gold here. I don't know. Should I? I agree with you on crypto. Oh, that's cool. I will have the 0 interest rate cuts with the side of tariffs. Hey, that's good, I guess. A stagflation plate. Yeah. There's gold pop up. I should have bought it, man. I was talking about buying gold. Look at this. Again, I'm going to attack ranges today if we can get them, but it's hard to catch them. The range leveled out a lot over the last 20 or 30 minutes since everybody started trading. 8 a.m. scrum's coming in about a minute here too. Let's see what happens. Yesterday was proof technical is superior to fundamentals. What do you mean superior? You mean technicals hold more weight than fundamentals? If that's the case, how come every time CPI, PPI drops, we get big market reactions to it? Soundhound? I don't know, man. Soundhound got a lot of hype, but the liquidity's low and it's had a big pullback over the last few days, so I don't know. Alright, is there some news that's out right now? Let's see. Hey, we're getting a big pop here. I don't know what it's from though, it's weird. I'll show it to you. Where is it? Just trading my own. Is this it? No. Is this one? Oh, this is gold, that's why. Oh no. Well, we were up a lot. We already took some profit. We got 2 left. We'll try to hold this break even. Okay, so we have Mexican GDP come out. I don't think that's going to influence things though, but we're slightly green here. We've scaled out of most of this up here on these big pops. And now we're kind of sitting in the last piece flat. I'm going to cut it before it falls fast though. We made money. Powell's speech is at 10 a.m. Eastern time. Guys, 10 a.m. Eastern. right, we're still bouncing. All right, guys. So, now we're hopping back up here. I don't know. Let me make sure the Jackson Hole Symposium's not now. It's supposed to be at 10 a.m. But I'm pretty sure it's 8 a.m. Mountain Time, which is 10 a.m. Yeah, so it's 8 a.m. Mountain Time, which is 10 a.m. Eastern Standard Time, which is in 2 hours. Chat, 2 hours. I got you guys. I'll put a timer up for you guys here. Okay. About an hour and what, 57 minutes left. Yeah, that's almost exactly right. Here you go. Here's a timer for you guys, for everybody asking. Again, I'm looking at the Jackson Hole Symposium thing right now. Here we go. Again, it's at 8 a.m. Mountain Time, which is 10 a.m. Eastern. Because remember, this is the Kansas City Fed. Yeah. All right, so we're moving up. We're at 260s. Yeah, I got you. There's the timer. All right, guys. Nasdaq's ripping back up, man. What's your opinion today about Powell's speech? I think Powell's going to be hawkish, restrictive, and refuse to commit to a rate path. Personally, I think yields are reflecting that as well over the last few days. I think Powell's going to refuse to commit to a rate path, is what it is. So I think Powell's going to be restrictive, data dependent, refusing to commit, and yields are going to increase from it. Personally, continue to increase. Yeah. Yeah, you gotta be careful in crypto. I don't know what a loop scam is, Sam, but I know a loop choke, which is, you know, jiu-jitsu people know what I just did. Why would Powell signal a cut when S&P and housing prices at an all-time high? Well, S&P is not necessarily a reflection of the economy. An example of this is in 2020 and after 2020, the market broke highs, but the economy was in a different state. And so, you know, it just depends. Now, a loop choke is like you grab the collar, you pull it, you loop your arm back into it, and then you go like this, you know. Lower rates needed for freeing up housing inflation. Well, we could end quantitative tightening in mortgage-backed securities. That's going to benefit it's not going to benefit house prices. It might actually make house prices more expensive. And so lower rates might make housing worse, not better, in terms of price. But what it will do is lower mortgage rates. It might make rent less, you know, but it's nuanced. What if he's not wearing a collar? Well, then you do some other chokes with it. I like no gi better than gi anyway, but He cuts rates in 2022 when inflation was high and landed in hot water. He's not cutting with PPI hot like this. Yeah, and PPI is not the biggest look at inflation. CPI will matter. PCE next week on Friday will matter even more. And so it depends on what inflation looks like. We got a couple reports. I've said this before. On Friday next week, we got PCE inflation, the Fed's preferred inflation metric to gauge. That's Friday next week. We also have GDP on Thursday. This is going to be the second revision, or the first revision of GDP on Thursday. Show us the state of the economy a little bit. We're going to have jobless claims as well on Thursday and updated that. Yesterday, jobless claims showed higher jobless claims than expected, weaker claims, more people filing for unemployment than expected. And then early next month, we got another labor report, and then we're expected to get a big quarterly revision from the BLS early next month as well, right? So there's a lot of stuff that's going on early next month that might shake things and influence rates. It's kind of getting a little close to the meeting to have too big of an influence, but we'll see. The first 9 days of next month are going to be important. Yeah, well, I'm not really necessarily talking about rent decreasing. I'm talking about how much can you charge for rent relative to the house price, right? So I'm talking about a little bit more back down to earth in that context, you know. Yeah, we got the Jackson Hole Symposium again, 10 a.m. today. That's in about an hour and 50 minutes. We're here to cover. We got the market open in about an hour and a half, about an hour and 20 minutes now. The 8:30 scrum is happening today. We don't really have any big data dropping. If we take a look at it, nothing big really. It's been an interesting time though. Canadian retail sales. Collins is supposed to speak in 51 minutes. So Collins speaks at 9 a.m. this morning. I expect markets to be flat. What's your plan for trading today? Let me know in chat right now. Like, what are you planning? How are you planning to trade today, guys? Let me know. Yeah, Powell was pretty hawkish. He was data dependent. I thought he would be dovish and pause. Instead, he was hawkish and pause. So he was much more hawkish than I expected him to be last meeting. Much more hawkish than I expected. Holding, waiting for signs. If you buy a 30-year US bond at 4.5%, it's going to 4.5% regardless. Yeah. No, that's true. New bonds are the ones that are influenced by it, not old ones. But because of supply and demand dynamics, it's going to influence the price of those bonds. You know, if that makes sense. All right, we're going down. We're at 250s. Like basically, if you got a bunch of if you got 4.5% interest bonds, and then yields spiked at 6% or you know whatever, it's gonna make those bonds worth less, you know. Yeah, the government's still paying. He speaks at 10 a.m. today, Eastern time, 8 a.m. Mountain time. You gotta think, they're in the mountains right now. They're in Jackson Hole, which is like a skiing resort. It's like a skiing resort. And so you gotta understand, they're at Jackson Hole. They're in the mountains right now. It's very like a bunch of bankers getting together and talking about economics in the mountains. I'll watch from the sidelines. Looks like I can't type today. Buy the dip, buy gold, sell Bitcoin. Yeah, if you think we're gonna be hawkish today, maybe that's the move. Look how choppy the NASDAQ is though. Like it's not holding anything. It's going up and down and up and down and up and down. Okay, so a text release from Fed Chair Powell is expected at 10 a.m. alongside the commencement of his speech. We're going to look out for it earlier, though, if we could find it. Again, I tell you this, I don't think he's going to commit to anything today, unfortunately. All right, NASDAQ coming down here. Yeah, just to put this in perspective, Jerome Powell almost always uses the Jackson Hole Symposium to talk about monetary policy. And again, just to put this into perspective, to talk about it, the text is released ahead of time, but only right before the speech, usually. The Federal Reserve publishes the full prepared marks on its website, typically at the exact time the speech is scheduled to begin, 10 a.m. Eastern time today. There's no embargoed early release for the public. Only accredited media under embargo may sometimes see it shortly before, and markets will react instantly the moment the Fed releases the text online. Algorithms will scrape it and obviously react to it and trade on keywords like inflation and rate cuts and financial stability. But the initial market move happens on the release of the text, not necessarily while Powell is speaking. And if he does a Q&A session or off-script remarks can add volatility, but the prepared text is the main thing. Yeah, so it's going to be panel discussions and academic presentations. Again, this speech today is titled Economic Outlook and Framework Review. So, markets are muted ahead of this. Bitcoin down today, technically red on the day now. It's down to 112s. It's at 10 o'clock. PC report is next Friday, the 29th. Nvidia earnings are on Wednesday, GDP is on Thursday, jobless claims are on Thursday next week. So jobless claims and GDP are on the 28th. Nvidia earnings are on the 27th. I thought the president was going live at 12. Yeah, I personally thought he was going live at 12. What question, Sam? I'm not really sure. I might take a couple bracketed scalps with targets during president speaking. Aside from that, I only intend on possibly placing a bigger trade for longer, but not until 15 minutes after. Yeah, that makes sense. Yeah, dude, I mean, like I said, sometimes I'm just talking about other stuff. I'm looking at other stuff. So I can't watch the chat always. But I appreciate, you being here. If you went live at 10 a.m. at the same time, yeah, it'd be chaos. Look how choppy the NASDAQ is, though. We're at the top of the range. We'll see if we can break this range now. All right, so we did get a pop here. Look at this. There's any breaking news. I don't necessarily see any. Ugh. Man, I don't know why I keep yawning today. India official says they're going to make their first locally made chip by the end of this year. We'll see. Again, we'll see what happens with Powell. Again, Morgan Stanley thinks CPI and jobs data, not Jackson Hole, will guide the Fed. Of course it will. Why would the Fed guide themselves? You know? Like, so you're going to tell me... Never mind. So many bears won't be surprised if it's dovish. Yeah, peace and love all around. Yeah, all good, Sam. If I ever miss... If you spend a long time writing out an answer and I miss it, Sam, just repost it. I'll see it. You know, it's like that. You can do that. I won't get mad at you for spamming. The only people I get mad at for spamming is if they say the same thing over and over and over and over again. But if you post something once or twice, it's fine. Yeah, it's a long August, but the NASDAQ's starting to pop right now. NASDAQ's starting to pop. I don't really see any breaking news to justify this yet. But NASDAQ's starting to head up a little bit here. It's almost 8:30. The Jackson Hole Symposium is at 10 a.m. today. NASDAQ's heading up, though. And again, here is the Jackson Hole Symposium. I had it somewhere. Where'd it go? Here it is. Smid spoke yesterday. We got some comments from him. This lady Janice Eberly spoke yesterday, or spoke. Is going to be speaking off and on today. But at 8 a.m., which is Mountain Time, which is 10 a.m. Eastern Time, we got Big Papa Powell giving his keynote speech. So, see what happens. We got some other members here. I don't really see anybody that's going to have any significant influence outside of Powell from this event. Lagarde, maybe? President Lagarde, the ECB president. She might have some influence. This dude, Uda, the governor of the Bank of Japan, and Andrew Bailey, governor of the Bank of England. These guys might have some influence here. We'll see. But I don't see anybody else that really would. Nobody else is important. No offense to them. But we do have the president and chief investment officer of Ruth Porat of Alphabet and Google. Ueda? Yeah, I can't pronounce it, sorry. It's hard to read chat. Also, keep on checking data and talk at the same time. Yeah, NASDAQ's ripping up here. Looks good. It held in my longs there. No borrowers looking to raise capital Friday in the U.S. investment grade primary bond market, according to Bloomberg. NASDAQ's getting up there, though. kind of short now. I don't know. Again, next week we do have PCE data, which is big. Yeah, so Nvidia is stopping production of H2O chips. I've talked about this probably 4 times today, but it's probably good to review it. Nvidia is halting production of H2O chips. The reason they are is because China has been discouraging people from buying them, in, you know, substitute of Chinese-made chips, right? So that shows, to a certain extent, a lack of interest in the Nvidia H2O chips overseas there, and because of that, Nvidia is halting production on them. Nvidia, because of that, is down about 1% today. It hasn't really moved over the last few minutes, but it's down about 1% today because of that. It's a move that's influencing markets. Feds will probably wait for PCE data and another jobless claims number. Maybe. They'll probably wait for the labor revisions too. Newegg? Where's Newegg? Bitcoin's still struggling here. Here's Newegg. Right back up. Yeah, the reason it went down is because the Pharma Bro guy shorted it. I still can't imagine Newegg holds up here. You never know, though. You never know. But I still couldn't imagine it holds right here. We'll see. Yeah. Again, we got an hour and a half left. We did a poll here. 62% are hawkish. 38% are dovish. Pharma guy might have gotten liquidated. What's up, Don? We don't really, I mean, we got Canadian retail sales data at 8:30. I don't think it's going to have an influence over markets. Maybe it has some, like, slight influence, but I don't think it's going to be major at 8:30. All right, guys. Volatility's been light this morning ahead of Jackson Hole Symposium. We will see what we get today. Again, I talked about this earlier. Like, people are pushing for QE, which would spike inflation, to make altcoins or Bitcoin or whatever go up. I mean, I don't agree with that, of course. Because what's the benefit of Bitcoin and altcoins going up? And again, it's all relative to, I guess, how much of that you hold. But what's the benefit of that if prices are up 2, 3, 4 times what they were? Right? Is that really a win? I don't think so. You know? I've seen that argument a lot the last 2 weeks. People pushing for quantitative easing. In what world is quantitative easing justified right now? I'm genuinely open to hearing your argument. I'm not against you. We can disagree on certain things. It's all love here. But if you think we should do QE outside of just wanting crypto to go up, what's your reason for it? What's the justification for quantitative easing? Just to put this into perspective, quantitative easing is a form of money printing in which the Fed creates online bank reserves and then uses those online bank reserves to buy up a bunch of bonds and other financial assets like MBSs. It essentially injects liquidity into them and helps bring interest rates down. But the consequence of that is inflation a lot of the time. It's actually much more risky to inflation than a lot of other stuff. And so I just don't know what the justification is, especially with high PPI inflation right now. I think you could argue 25 basis point cut. I think you could also maybe argue if we don't cut, ending quantitative tightening, which is not the same thing as QE. QE is the buying up of expansion of the Fed's balance sheet. QE is the reduction of it. And, you know, in the middle is just not doing anything, you know, but Well, I don't know. We saw the economy rebound faster than a lot of people thought. I think they had to do it during 2020. But I also think if you want to know why a lot of people are still unhappy modern age, it's because of the quantitative easing, supply chain problems, stimulus checks, and low interest rate environment of 2020. But if we didn't do that, we would have gone in probably a deeper recession. So I can't really knock them for doing it then. I don't know if we should have sent out checks. It's subjective. But yeah. John's an altcoin hater. We want our 20x. Listen, as long as it doesn't come on the backs of QE, I'm for it. I hope your stuff goes up 20x. Prolonging a recession eventually. Yeah, but where's the data to justify that? All right, Nasdaq's still pushing up. Let's see if we break this 273 level I got on my charts right now. With inflation where it is, no way is Powell going to be dovish. Yeah, we still have a hangover from 2020. That's what I'm saying. Let's not do that again. Then people are going to really be unhappy. Unless you're a crypto bro. Right, exactly, Philippe. I agree with you. I'm not saying the Fed had control over the checks. What I'm saying is that contributed to inflation. Of course it did, you know. I think he's gonna be data dependent. He's gonna be refusing to commit to a path. I've said this over and over again, and I think that's probably why the market dipped over the last 3 days. It's probably because they expect the same thing. They expect hawkish / neutral Powell, like a Powell that's not going to commit to rate cuts, and that's what I think we're going to get that today. He might just shock everybody and be ultra dove Powell, but I don't think so. He wasn't data dependent with the previous president, though. Yeah, but again, I've talked about this before. And again, you're not necessarily wrong. But you got to think, okay, so if Powell cuts rates in September, November, and December of last year, who does that really benefit in terms of interest rates during their presidency? Does that benefit the previous president or the current one? That's the question you have to ask yourself. I hear people using that argument a lot. Well, they cut rates with the previous president. It's like, yeah, they did. But who do you think that benefited? There's a lag sometimes with stuff. It depends on what you're looking at, which time frame of rates you're looking at. But there's a lag. So. Bro, I'm in crypto. I've been in crypto for a long time. Like, I want Bitcoin to go up. I just don't want inflation to spike. And we shouldn't print money with super high inflation. That makes absolutely no sense. It just doesn't. It just doesn't make any sense. All right, so we're coming down. We're at 270. Let's see if we can get over this level. All right, there's 830. Nothing really happened. We had Mexican or Canadian retail sales show up at 1.5 versus 1.5 flat. Canadian retail core coming in at 1.9 versus 1.1 expected. A little bit stronger Canadian retail sales than expected, but not substantially here or anything like that. He speaks at 10 o'clock, guys. 10 o'clock. I love you. Hey, dude. How you doing, man? Love you, bro. Hey, what happened? Oh, that's your shirt? Yeah, I like it, man. That's a cool shirt, dude.
There's what.
What?
There's what happened.
What do you mean? Yeah, so this is the NASDAQ. These are all...
No, I'm saying that is what happened.
Yeah, that's right. Look, this is live right here. And this is the stream that I'm running right there. Yeah, that's the chat. That's how many people we got. Yeah. All right, dude. I love you, bud. All right, have a good day, man. One day I'll teach you about all this stuff, okay? All right, dude. Love you, man. All right, so we're pulling back. We're at 273s right now, 273s. I do kind of teach him a little bit about economics right now. I don't want to teach him day trading right now. He's too early. He's not old enough. All right, so Newegg all the way back up after the pharma guy shorted it. I'm not even mad at him for shorting it. I didn't like Newegg at these levels right before he said that. If you guys listen to me, I said I can't imagine this holds. NASDAQ is now dipping down. Where are we dipping down? I'm not going to say this is the greatest level of all time right here. You know, it might be. We'll see what we get. We got an hour and a half left. Best trading advice? My favorite trading quote. I can't remember who said it. It's probably a billionaire somewhere. But it goes something like, and I might butcher this quote, but it goes something like, money is not made in trading. Money is made in waiting. Best quote ever. Because it's absolutely true. It's absolutely true. That's my, I don't know what financial advice is. This is definitely not that. But that's my favorite quote. All right, NASDAQ dipping down heavy here. Again, I expect to get chop. I think if we like approach a big level of mine today over the next hour and a half, I am going to be I'm gonna be attacking a range bound trade, which means like shorting at highs, buying at lows. I'll be a little bit more tempted to short at highs though. Just to put that out there. Yeah, that's my favorite quote in markets. I also like the time to buy is when blood is running in the streets. I think that's a very important quote to understand because a lot of people experience market crashes and they get emotional when they sell. And the people who typically do the best during crashes are people that buy up the dips, you know. If you got time, unless you're about to imminently retire, if you got time is your friend. Time heals a lot of wounds in the stock market. You can be as wrong as can be, and if you hold it for a decade or two, you're gonna make money. You know, if you average in on the pullbacks, you'll probably make money even much faster. And so, again, not an investment professional. Don't copy me. Gold is still dumping down here, though. Let's see if it rebounds back up. NASDAQ's pulling right back. All right, NASDAQ's falling here. Falling. Okay. I'm trying to get away from the Christmas music in August, guys. I'm sorry. NASDAQ's flushing. Again, we got Canadian retail sales. All right. We had the Fed Listens event last month. Again, just to put this in perspective, guys, I'm going to reiterate this stuff right here. Today's program with the Jackson Hole Symposium is scheduled to begin at about 10 o'clock Eastern Standard Time. Right around 10 a.m., we're going to get the quotes, the text. And then we're going to be able to listen to Jerome Powell speak during it. But it's going to be followed by panel discussions and academic presentations. But Jerome Powell is scheduled for 10 o'clock. The text is released ahead of time, but only right before the speech, right? They publish this on their website, typically at the exact same time the speech is scheduled to begin. We're going to break it all down quickly here as well. Top 3 fastest readers in the world right here. And this is embargoed. There's no embargo. I mean, early release for the public. Only accredited media may get it early, but, you know, it's basically going to come out right when the speech comes out. We're going to break it all down live right here. The speech itself is titled... the speech itself is titled today... Hold on, let me make sure I get this right. This year's themes explores labor markets in transition, demographics, productivity, and macroeconomic policy. Jerome Powell gives a keynote again at 10 a.m. We'll see what that looks like. Nasdaq's very choppy. Look, I'm going to look at a bottom range level of about 235. We get down there, I might buy it. Gold's coming back down. United Health is up. '80s music has some of the best music, though. '90s music, too. Yeah, isn't the president supposed to speak at like 1 o'clock today or something like that? We got this 200 exponential here, which is influencing things, but we also have kind of like a bounce right here every time. So we break under that. If we get down to this, I might buy it. Yeah, guys, so we're getting pretty close to the Jackson Hole Symposium. We got about an hour. We'll see what that looks like. Okay, 12 o'clock. You think he's trying to hedge against the Jackson Hole Symposium? D? Bro, listen, I grew up on VHSs. Let's not bring them back. I don't want to have to rewind anything, bro. I get it, it's nostalgic. I'm okay with bringing the N64 back. But I'm not necessarily interested in bringing VHS tapes back, bro. Yeah, Bitcoin's looking very weak. Look at Bitcoin. Bitcoin at 111s now. Yikes. Bitcoin falling. Alright, guys. Almost 9 o'clock. Markets are pricing in this. Yeah, a lot of people are pushing for QE in crypto. Again, I don't agree. And I'm in Bitcoin right now. I'm holding Bitcoin literally right now. And I have been, to be honest. But money printing to make crypto go up's nonsense. Look, I'll put it this way. Listen, if we continue to get weak labor reports, as well as we see GDP start to dip, as well as we see, you know, stability signs in inflation, sure, print money, okay? If we don't get that stuff, I don't want it. I'm self-employed. I don't want to see inflation go up. I don't have a boss that can raise my freaking salary. I make what I make. I don't want to see that get dwindled down because of money printing so crypto bros can be rich. I'm sorry, I just don't want that. I'm in Bitcoin. I'm in a bunch of other stuff too. But that doesn't make any sense to me. And I don't think there's any real justification for it right now. I just don't. And I get it. Nah, we're going to stay on the stream and just retitle it. Yeah. All right, so we're pulling back again. If we get down, there's 250 bounce. I'm just looking for a range bound trade. Bitcoin's starting to come back up a little bit though. Nvidia's weak. That's been driving markets down too. Yeah, I mean, the world's going digital in regards to currency. Like, you hear people saying this all the time. They're like, oh, you know, all this stuff is bad or whatever. Listen, the world is going digital with currency. This is very self-evident. This is obvious. Everybody sees this. How much cash do you really carry or need? You know what I mean? Like, unless you're a rapper carrying around big stacks of cash just to flex it, who needs cash right now? Hell, half the time you can't even spend it. You know, it's already happened. Now, the question you need to ask yourself is, do you want the government to control that? Or would you rather an independent source like Bitcoin or something else, you know, handle it? I know what I'm choosing, you know, and it ain't the government. And so listen, I support Bitcoin. I want Bitcoin to go up. Trust me. But I don't want to print money to do it. Yeah. The whole world's watching Jackson Hole today. We'll see what happens. I'm ready for it. It has to do with privacy. You've already lost that, brother. You think your money sitting in a bank is private? Well, no. All right, Jackson Hole Symposium coming soon here. Y'all be ready. We see a Jackson Hole or Jackson's Hole. We're gonna see what Powell thinks, hopefully. Yeah, I like gold. Gold's a different story completely. Bitcoin bouncing back though. It's back up to over 111s at least here, at least in Bitcoin futures that I'm looking at. Nvidia's still down on the day. Gold, speaking about gold, is on this left side. This is gold right here. I was thinking about buying that pullback in gold. I should have done it. Coulda, woulda, shoulda, but still. Yeah, I think he's going to be neutral, data dependent / hawkish. Like, I don't think he's going to be dovish by any means, and I think that's what the market has been getting baked into over the last 2 days. I probably said this a bunch, but I think that's the most, like, if you're trying to analyze what Jerome Powell is going to say today based off of previous Jackson Hole Symposium as well as previous outlook and sentiment around Powell, plus when you consider the PPI inflation report that we got last week that was shockingly high, I don't think Powell's going to commit to anything today, man. I think he's going to be neutral or hawkish, and I think the markets are going to interpret his neutralness as hawkish. I think that's why we've dropped the last 2 days, is the market preparing for that, as well as some other catalysts that have come out that have influenced things. But that's what I think. I think it's somewhat priced in already. It depends on what he says. You know, like, market analyzes things, and then if it does anything different, market reacts, right? I think we're baked into a hawkish, neutral Powell speech, and if Powell comes out dovish, market's going to react. If he comes out more hawkish than expected, markets are going to react. So we'll see. Yeah. We'll see. All right, we're chopping. Bitcoin's making a rebound though this morning. Again, 10 a.m. Eastern time. You can read the bottom of the screen. Speech is coming soon. Let me schedule this right. All right, guys, so we're still testing. Bitcoin now technically green on the day in Bitcoin futures, so it is coming back a little bit leading into the top of the hour here. NASDAQ still very flat range, sideways. Nvidia down after halting H2O production. So just prepare yourselves, guys. We got Jackson Hole coming soon. Catching the chat back up. Powell talk. What time? It's at 10 o'clock, guys. 10 o'clock. Yeah, Bitcoin's heading up here. Only hiking rates could dump the markets. Nah. Powell thinking we're going to pause for the rest of this year might dump markets, I think, right? What do you guys think? Do you guys think if Powell says we're not really expecting any rate cuts this year, you think markets are going to go up or down? I think markets personally going to go down, but I guess you never know. Hey, thank you so much for the donation. I don't know much about it, James Bond. It's not really anything that I know about or watch heavily. I appreciate the donation, though. Thanks so much. Plunge projection team, yeah. Wealth creation is done by buying lows, so dump the shiny object and loading up on UNH. Yeah, I bought UNH at 240s. Remember, I bought a bunch of stuff. Honestly, I bought Target at 94s. It hit almost 100. We took most of the profit off. We bought HIMS, averaged into like 40 something, like low 40s. We've taken a lot of profit off of that. It's at 44s. We bought Crocs at 75. It's at almost 84 right now. And this was all like 2 weeks ago. We bought all this stuff. So swing trade's going well. Yeah, if we take a look at the rate cut odds for September as we speak here, chat. we've actually gone up a little bit in terms of rate odds for September. So at this point in time, rate odds for September have increased. They were at 69% this morning. Terrible drawing here. They were at 69% this morning. They're now at 71.5%. Odds of a pause are currently at 28.5%. So odds of a cut have actually increased this morning. Yeah. AMD, Nvidia, Nike, Amazon, Apple. Yeah. Is it a stable coin, Liam? I don't know. I don't know anything about that. I think it's... Stablecoin is interesting, I guess. But Bitcoin is jumpy. Yeah, Bitcoin's jumpy. Bitcoin's now dipping down a little bit. Again, the market's sideways, though. We're not really getting any easy range to attack. We got a little bit over an hour until the speech goes live. But the market's not easy to attack here. Well, again, we asked people this morning. It's still pretty split. I'm surprised 38% of people are thinking Powell's going to be dovish. I'm surprised it's that high, to be honest. Do you, for those that are in the chat right now that think Powell is going to be dovish, why? Let me hear your arguments. I'm not against you. It's all love. We all have our different arguments. It's all good. But if you think Powell's going to be dovish today, explain it. I'm curious. 71 U.S. companies filed for bankruptcy in July, the highest since 2020, up from 63 in June. What do you think about Adobe? I think Adobe is... I talked about this yesterday. Yeah, I don't think we're going to be hawkish. Or I don't think we're going to be dovish, I mean, today with Powell. I like doves. Because he's playing balancing all these times. Maybe he balances. So it's one of the Fed's main jobs to be predictable for stable markets. Yeah, for sure. So anyway, what do I think about Adobe? I think Adobe has integrated AI into their stuff well, right? But I still think the net effect of AI on Adobe is going to be they're going to lose business. You know, like Photoshop, people use Photoshop a lot, but now you don't need it quite as much, even with them implementing AI systems. And so I think the net effect of AI for Adobe is going to be they're going to decrease their business. But they still might stick around. They just might not be as successful, if that makes sense. But you never know. I mean, they could always pull some stuff, but I think AI is going to influence a lot of people and a lot of businesses in that way. And I think they already have. If you look at Adobe long-term chart, apparently I can't spell this morning. If you look at Adobe's long-term chart, if you think about when the AI boom really started, it was back here. Adobe is down from $700 a share down to $350. It's basically half of what it was. Here's 244s in the NASDAQ. We'll see if we can buy some dips here. I'm not as confident on the long side, though, to be honest, here. I'll buy 235, but, you know, I'm not as confident on the long side here. Adobe is the new Kodak. Not necessarily. They're implementing AI well. So, Adobe is a software. Kodak's a hardware camera. You know, it's just different. It's just different. All right, so we're heading down here. We did bounce off this 244s. He's not out in January, Mick. He's out in May of next year. May of next year, and even then he might stay on as governor. Yeah, market is looking heavy. Again, maybe if we get down to 235s, I might buy it. Just based off of, like, we're heading into the open, we might get chop. We could bounce right here at 244s, though. I've had this level on my chart. But I'm looking at 235s. Yeah, that's what I'm saying. I think Adobe's business is going to get replaced a substantial amount from AR. It already has. But you're still going to need it in some ways. So I don't think it's going to be like Kodak, personally. But maybe. Bitcoin back red on the day again. Why have the odds of a cut dropped to leading up to the Powell talk today? Because people expect Powell to not commit to cuts. You got to understand something. Markets don't react immediately simultaneously when some big catalyst happens. They react previously, before the catalyst happens. And so we're getting baked into what everybody thinks Powell's going to do today, and we have been for the last few days. I think that's why we've seen red action. I think Powell is going to refuse to commit to a path, and people are going to interpret that as a hawkish thing. And that is why the NASDAQ and the S&P and a lot of other stuff has dropped, along with some bad chip news and other stuff. But I think that's kind of what the market's getting baked into right now, is a hawkish, data-dependent, neutral Powell that's not going to commit to a path, especially not commit to cuts. But I could be wrong, and maybe he's super dove at the open, or at 10 a.m. I don't know. All right, we are breaking down a little bit. I still want 235, so let's see if we get it. Is that his new nickname, Powell Super Dove? I don't think so. I think a better nickname for Powell would be like the Hawkish Avenger or something. We're starting to break down here. Let's see if we hit that 235 level. Bitcoin's still red. Nvidia starting to bounce, though. Could drive markets higher. The purple tie guy. Yeah, that's a good one. He's Dayhawk. Is that like Nightman? Dayman? My wife and I love It's Always Sunny. Alright, here's the drop. Again, we're looking at 235. Let's see if we catch it. Might start in here and add small down to this level at 235. Expecting a bounce. We can get an add to it. Alright guys, there's 9 a.m. That's the 9 a.m. level. I haven't really gotten a chance to add to this, but we're trading small today. So maybe if we get into the green, we'll add to it. Why try to catch a falling knife? Because I think we're going to have range-bound movement leading into Powell. I think range trading is more predictable than trend trading today, ahead of this big catalyst that the whole world's waiting on. And yeah, I think that just makes more sense. Again, though, I'm gonna cut my longs much faster than my shorts today, because my bias is bearish, but sideways, and so But yeah. And my bias is bearish but sideways. I think we're going to have more momentum on the downside, more fearfulness on the downside. I think markets are pricing in hawkish Powell. And because of that, we're going to be a little bit more bearish today, most likely. But you never know. I don't freaking know, man. Market might rip up huge percentages. I wouldn't call myself a generational bull. If we're talking literal generations, I think you have to be bullish, you know. But short-term market can do anything. So. Also, guys, if you haven't already, check out Top Step. Beautiful way to help support the channel. No PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell. Get around the PDT rule. It's $50 a month for the base one. You pass it, you get a 50K funded account, 90% split. You fail it, you lose $50. It's the best of both worlds. Very similar to day trading stocks. Just a great way to learn. I'll put the link up. They're a sponsor of mine. I'm biased. I get paid by them. But genuinely useful for traders. Genuinely useful. And so, yeah, I'll put this link up. Appreciate the love. Thanks so much. All right, I'm going to cut this right here and just take profit. Again, I'm not the most confident on the upside today. I will attack range-bound trades like this, but not heavily. I'd rather short the top of the range. We also have the Fed Collins speaking on Bloomberg TV. So let's see what they got to say. I'll pin this to the top of the page. I'm also going to pin another scroller here, apparently, because we need it now. I'm going to pin this because we get so many people asking what time is the speech. Number one, it's in the title. Literally right now, it's in the title. It's literally right now in the title. So, yeah. It's in the title, guys. All right. I'm going to make this small and legible and readable. There you go. So many people are asking. NASDAQ still pushing up at the 200 exponential here. I'm not going to put it in the title, but I'll put it in the big, I'll put it in this. 10 a.m. guys, there's also a timer here. You know what? Hold on. You're welcome. Yeah. Again, just to clarify, guys, let's break some stuff down here for some people that might not understand this. Okay. The text of this speech is released ahead of time, but only right before the speech usually. The Fed publishes the full prepared marks on its website, typically at the exact time the speech is scheduled to begin, which is going to be at 10 o'clock Eastern Standard Time, AM, of course. Usually there's no early release for the public. Only certain members of the media may get it a little bit earlier, but markets are going to react instantly the moment the Fed posts the text online. Algorithms are going to scrape it, trade off of it, scrape keywords like inflation, rate cuts, and financial stability through it. And so those are the buzzwords you really want to listen to, is that. You want to listen to all that stuff. Again, the initial move happens after the release of the text, not necessarily while he's speaking, but we're going to publish all of it live and go over all of it live as soon as it happens. So I will publish the speech here on one side and then Powell speaking on the other, so you can read it all simultaneously. So that is what's going on today. We got 40. 53 minutes left. NASDAQ is bouncing back up. And again, if we get back up here to 75, I am going to short. Yeah, if we fight our way back up here, I'm going to short it. Bitcoin consolidating now, gold going sideways. Nvidia rebounding back up. One of the things that's driving this move is Nvidia bouncing back up. So Fed Collins also said that growth has been slowing, but economic fundamentals are relatively solid. Have to look at whole picture and not focus too much on one side or two specific indicators, according to Fed Collins. All right, so Fed Collins speaking right now. I'll put this up in the chat. Who's Crimson Chin? Are you saying my chin is big? Man, it's not like Jay Leno big. Hey, what's up, Mitch? Hey, thank you, my friend. Hey, good luck, brother. We'll see what we get today. Today's fun. I remember the Fairly Odd Parents. Yeah, so rate cut odds went up to 72%. I did see that. Last time I looked at it, it was actually 71%. 71.5%. Depends on if you're rounding here, but yeah, currently we're at 69.6% again, actually. So we actually just dipped down to under 70 now for whatever reason. You can watch bond yields, which is TNX, if you want to take a look at like what these are doing, like real time. So here's bond yields right here. Yields are chopping back and forth, as you know, expected here. NASDAQ's moving up a little bit, mostly driven by AI and microchip increases. Yeah, I can tell you more about Rocket Power than I can about Fairly Odd Parents. I watched Fairly Odd Parents, but Rocket Power was my show for years. Yeah, and if you really want to see what yields are doing, you can look at just actual 10-year treasury yields. Yields have actually decreased a little bit relative to early this morning here. I want to short up here. Maybe I should tighten my range a little bit based off of the price action. But again, you can kind of see yields decreasing after 9 o'clock here. We got 20 minutes left until the opening bell. But you can see yields start to fall down a little bit on this report ahead of it. So and again, when yield, this is just to put this into perspective, right? Yields going down is a lower interest rate sentiment. Okay, yields going down is a lower interest rate sentiment. If we take a look at a longer term graph of this though, yields have been increasing since inflation data came out, you know, really since the beginning of this month. But on a net basis, we're down since July, you know. And again, yields, interest rates follow each other. Bond prices and bond yields inverse each other. So like TLT is increasing, means yields are going down, which is a higher bond prices for TLT, but ultimately they inverse yields. So TLT going up means yields are decreasing most likely, which is a lower interest rate sentiment, just to show you how to track all this stuff. All right, guys, we are getting close to the Fed comments here. Jackson Hole Symposium. You guys ready for it? Markets are waiting on this thing right now, man. Again, just to break this down again. Jerome Powell said to speak 8 a.m. Mountain Time. This is 10 a.m. It's 10 a.m. Eastern Time. But they will release the text early. Oh. It's an event for sure. Yeah, I like Dragon Ball Z as well. Hawkish consensus priced in. Move is going to be a relief rally, I assume. Possibly. It depends on how hawkish he is, though. I say a slight hawkish neutral Powell is baked in. If Powell comes out much more hawkish than expected, market's probably still going down, I think. But, we'll see. I should have shorted up here. I just didn't. We didn't quite get high enough for me to short, but... Nvidia creeping down a little bit. The question is, do we buy this up? I should have shorted. I'm much more short biased right now. At least leading into Jackson Hole, and then it depends on what the speech says. We'll watch everything as it happens, but... Again, do me a favor. Hit that like button. Hit the subscribe button. Hit the notification bell. We appreciate it. I think Powell's going to be neutral. Yeah, Collins is saying not a deal done on what to do at our next meeting. And I think this is what a lot of people are reacting to as well. It's the Fed Collins speaking right now. This is her right here.
Realize that, but again, we can't wait until all of that uncertainty is resolved before we make our decisions. Those fundamentals are still healthy, and keeping that balance in mind of the mandate that Congress gave us for price stability and maximum employment is where I will keep my focus.
All right, so that's basically, you heard Collins. That was Collins live right now. Not a done deal on what we do at our next meeting. Following the dual mandate is essentially what she's saying here. So, yeah, Susan Collins is the Federal Reserve Bank of Boston president and CEO. So that is what we're at. Yeah, Nvidia earnings next week are crazy. We got a lot of stuff next week. We got Nvidia earnings. We have Nvidia earnings. We have PCE inflation on Friday. We got GDP data on Thursday. Jobless claims on Thursday. ISM manufacturing and services PMI. I think on. Let me see exactly when that is. Actually, no, we don't have ISM next week. We got GDP, jobless claims, pending home sales, PCE inflation, and Michigan consumer sentiment data. Case-Shiller house price index, durable good orders on Thursday or on Tuesday as well. So honestly, we got a bunch of stuff next week also. All right, guys. Hey, we got 15 minutes until the opening bell. Let's see if we start to get some volatility baked in. We've been purely sideways since all this stuff. Purely sideways. We'll see if we break out of the sideways trend. Powell, one word, data dependent, then drops the mic. I think markets will go down. Maybe. I don't know. At this point, the question is, how much is baked into this, right? Like, you take a look at the SPY. You take a look at the Q. Here's a 4-hour chart, right? But here's a week. Here's the last week. This is the last week here. So the question is this the market baking into Jerome Powell today? I think so. I think so. The question is, how baked in are we? SPY has dropped from 647s down to 6. What is that? Let me see if I can see it. Again, 647s. I'll call it 633. Is that 633? So in terms of the S&P 500, it is down over 2% in the last week. Over 2%. If you take a look at the NASDAQ here, the same trend. NASDAQ is down from 583s. And there's some other stuff that might be driving the market down, like H2O chip news that we got for Nvidia this morning about their halting production on H2O chips. 583 down to 564. So in terms of the NASDAQ is down 3.25%. So NASDAQ's down 3%, S&P's down over 2%. Is that the market getting baked into Jerome Powell today? I think so. I think it at least has some influence on this drop. Might not be all the influence. I think halting H2O chip production for Nvidia is not good, and Nvidia has been correcting a little bit this week. But yeah, shake and bake. Yeah. Yeah, we'll see, Jeremy. Yeah, PPI was not good. Remember, guys, one of the things that makes Powell hawkish today probably, and I'm sure we're going to hear him reference this at least a little bit, is there's a couple prints that were not good. But this print was certainly not good. Right? This print right here was certainly not good. This print was bad. PPI inflation 0.9% headline versus 0.2%. Core PPI 0.9% versus 0.3%. Almost 1% gains for both core and headline PPI inflation wholesale prices. Year over year, almost 4% versus under 3% expected. Headline 3.3 versus under 3% expected. So this PPI data, I'm sure we're going to hear some reference to it today. You never know, but I would assume we do. I would assume that's what we see. We had Collins come out saying they're going to be data dependent today, and I think that reiterates probably what Powell's going to be like as well in 40 minutes. But we will see. We'll see. Well, the VIX is at low levels right now, healthy life, probably because we have a big catalyst at 10 a.m. And so the VIX is going to be stable right now just because the range is tiny on everything. Yeah, they're going to use it to justify hawkishness. I agree. And again, you can give me a follow at Beginner Trades on X. We cover all this stuff live as soon as it happens. We got the opening bell today too. Ugh. Yeah, so again, we're going to do live the Jackson Hole Symposium at 10 a.m. We're also going to break down the actual quotes in the text. Again, we're live now. We're waiting. Markets are muted. Inflation is up. Labor report showed weakness. We'll see what Powell says today. Not fully baked in, but halfish. Yeah. What are the likes at now? I can't see. I got to refresh to see it. I don't feel like refresh it. Bank of Japan raising rates in October is kind of important. I don't know if it's as important. I mean, you have the carry trade dynamic, but I don't think it's as important. It's important, but I don't think it's as important personally. All right, NASDAQ ripping back up here. Again, I expect chop. Opening bell might give us some volatility, but I do expect chop. Speech is at 10 o'clock, guys. There might be a big scroller at the bottom in yellow. Also, a timer on the left side, as well as big letters at the bottom of the screen right now telling you, and in the title. Jake Paul for the new Fed chair? You know what I think we should do? I think we should have a boxing match for it. You know? Yeah, JP versus JP. Pay-per-view. I'll stream it live. Give me pay-per-view points for that. All right, Nasdaq heading up. We're at 264s. He's fighting Gervonta Davis, which is kind of crazy because Gervonta is tiny, but obviously Gervonta is just a much better boxer. Tank Davis is a much better boxer than Jake Paul. And so I still think he'll probably win as long as he can bulk up some ahead of the time and they don't have any restrictions on that. But size matters for sure. All right, guys. Hey, we got 7 minutes left until the opening bell. Bearish due to price rejections in crypto failing to make higher highs. I think crypto is waiting for this as well. A lot of the crypto market, again, they want quantitative easing, dovish Powell, dovish Fed, quantitative easing dynamic to boost crypto. I'm worried about inflation, though, and so I think we just got to be really careful not to spike inflation. We'll see, though. All right, guys, 7 minutes until the opening bell. Let's see what we get. I'm ready. I'm ready. All right, guys, we got Powell speaking. Oof. If we get up to 273s, I will short it. We got about 5 minutes left. You guys ready? Yeah, I'm looking at other breaking news here. Collins came out very data dependent. Snapchat said to be considering raising money for AR glasses project. AR stands for augmented reality, according to the information. I haven't looked at Snapchat stock in a minute. Here's Snap. Snap's down. Be time to buy it. People still use Snapchat a lot. It's just hard to monetize. It's just hard to monetize. Yeah, guys, so again, we got 4 minutes left. Yeah, so remember, guys, just to put this into perspective, a lot of people misunderstand Jackson Hole. The text is going to be released almost simultaneously as to when Jerome Powell speaks, right? And so the way we're going to do this is we're going to put Powell up, but we're also going to put the text up immediately so you could probably read it a little bit faster than Powell does and see how markets respond to the text that comes out, like right before the speech starts. So we're going to stream the speech, but we're also going to stream the text because arguably you're going to be able to digest the text a little bit faster in that way. And so, that's what we're doing. We got 2.5 minutes left. So we're streaming the speech, but we're going to stream the text and put some weight on the text just because that's important. And that's when we're going to be able to see it here. We'll also digest this completely live as it happens as well. So it's important to understand that. We got Bitcoin, gold up, Nvidia up, Bitcoin back red on the day. It's at 112.3s. NASDAQ is chopping in a very, 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 very tight range. Today we got 3 minutes left until the opening bell. We're going to day trade some, but of course we're going to cover Powell. All right, here we go. Jackson Hole. You guys ready? You guys ready? 2.5 minutes left. What do you think? Bull or bear at the opening bell, chat? Let's do a poll here, actually. We got almost 2,000 votes on this one. Are you bullish or bearish for the open? Is what we're going to do. Yeah, put it in 2x speed. Hit the live button. Hit the live button. Hit the notification bell. If you put it in 2x speed, you'll always be caught up with the stream here. NASDAQ's very flat, very sideways, very choppy. Got almost 1,400 here for the opening bell. And we still got 30 plus minutes left until Jackson Hole comes out. So, vote on that poll. Currently, we're seeing 55% bearish, 45% bullish out of about 120 votes in about 5 seconds. So, 2 minutes left, chat. 2 minutes left until the opening bell. We'll see what we get. I'm ready. I expect chop, but maybe the range will open up a little bit at the opening bell. Again, I expect chop, but I think the range might open up some. Here's Jerome Powell. They're saying this picture was taken a few days ago. A few hours ago by a friend of mine at the airport in Jackson Hole. This is not me, my friend. This is somebody else's friend. But here's Jerome Powell today. Looking tired. Jerome Powell's had enough of everybody's crap. That's what I think. Oh, man. Let's see if he says, let's see what he says today. All right, guys. Hey, here's the opening bell. Let's see what we get. Very choppy range. Very choppy range. No tie today. Let's see if he throws on a tie. All right, here's the bell. All right, there's the opening bell here, guys. NASDAQ's shooting up at 275. Tap my level up there. Look at that level right there. Top 3 best level ever. Now we're coming all the way back down here. We literally rejected exactly off my level here. Nvidia's falling down a little bit as well. Let's see if we pop back up. But this is the first 10, 15 seconds into the open. Nvidia's breaking down. Look at this dip down here. I wish I won the bell. Ooh, look at the NASDAQ. NASDAQ's falling here. Nvidia's falling. Gold's pushing. All right, NASDAQ's coming down here. Look at this. Let's watch 200s. Big bearish reaction to the NASDAQ. Big bearish response. Big bearish response. India is going to make fighter jet engines with France. All right, guys, so we're bouncing a little bit here, but definitely a red open so far for the NASDAQ, Nvidia, and others. We're about 2 minutes into the day. I would short 235s right here if we weren't only 2 minutes into the opening bell today. Ah, dude, I should have shorted it, man. Look at this. At least my levels are working. Sometimes the first move is the wrong move, sure. I think we're going to range today. I think we're going to go up and down leading into the next 25, 30 minutes. All right, we're popping back up. We hit 244s, 243s. Let's see if Nvidia bounces back. That's what I'm watching right now to gauge this price action. And again, hit the live button next to the play button. If you put it in 2x speed, you'll never be delayed on the stream, really. U.S. Treasury's Faulkner is going to leave the administration, according to the Wall Street Journal. We're starting to bounce back here. We're starting to see some pickup here. The question is, does Nvidia hold? I'm going to short. Might add to it, too. A little bit close to the bell. I don't usually trade this much, but for the stream, I'll do it today. All right, rejected at the 200 EMA. Let's see if we head back down. I'm not really liking how this looks, though. I should have waited to short the top of the range, like I said all day. I'm going to lighten this load a little bit. There we go. That's good. There we go. That's better. Don't you hate it when my support holds right here at 235? Look at that bounce. Literally exactly at 235s. There we go. I'm going to cut it right there. All right, nice green trade to start the day. Should have held that last little contract, but it's all right. We still made money. See if that 235 level holds it now. Again, we got 25 minutes left until Powell speaks. 25 minutes. Let's short this now. See if we get a pop. I don't usually trade this close to the day, but I'm looking at like bearish choppy bias. And we're just ripping up now. Yeah, we're gonna have to cut it. Now we're kind of flat since the bell. We're still in that opening range here, but look at Nvidia. Nvidia's getting back up there. So Nvidia's fighting its way back here. Look at Nvidia. It's back up to 173s. Hey, thank you, Rusty. You dare me to short? What about double dog dare? You know. All right, we're at 243s. 25 minutes left until Powell scares the market. Again, 25 minutes left until Powell freaks the market out. We'll see what we get. $100 long at 10 a.m. I don't know, bro. I'm not doing that. Speaking of Christmas, I don't know, like... I keep getting hit with Christmas music this morning. Is that a bull or bear sign? I don't know. We're 5 minutes into the day, 6 minutes in. We're too rangy for this. The range is too small for even me to attack right now. All right, so ECB's... One of the ECB members, I'm not even going to attempt to pronounce this name, reiterated the importance of central bank independence. Which is kind of like a hawkish thing, I would say. If somebody pushes the central bank's independence, they're basically meaning we don't want to get pressured to cut rates. And so I would interpret that as hawkish, but... We're starting to fight our way back up here. Let's see if we get up there. I will show at the top of this range if we get it. Polar bear music. Nvidia's up. I'm gonna short this here. But maybe add to it. I might have gotten in a little early, but that's alright. I'm gonna add some size into this. Alright, we took a half off there. Alright, we're creeping up to the top of the range. This is actually just one contract, so I'm going to add a little bit to it here. See if we would liquidity grab up there, but it's a risky trade. I'm going to try to give it some time and just let this run, but it's only 3 micros, so it's not really that much. I just want to give this some time. I think we could chop. I don't want to add any more to this though. I think I just gotta wait for it. We got an entry at the top of the range. Again, we got 20 minutes left. As long as the market doesn't hold 273 now, I'll be okay with this. There we go. Back down to almost flat on the trade. Hey, we're green now. That feels good. If we flush all the way back down, eating everybody. There we go. Better. Got some more. We're gonna sit on the rest of this, maybe flat, maybe add some if it gets deep enough in the green. There we go. I'm gonna short a bounce here. Alright, we're short. Bro, it's fake out city right now, though. More back down for me. There we go. Alright, we covered that. I don't know what I want to do with this. I guess I'm going to sit on this, but we've already made money on the trade. Alright, guys. Hey, less than 20 minutes. Alright, there we go. We're green. I'm gonna cut this here. Made a little money on the trade. We could reject my level again though, but it looks too strong. It looks like it's popping back up there. We get up to 300, I'll short this. Microsoft and Nvidia are ripping up this morning, are one of the things driving the Nasdaq and S&P right now. Yeah, I'm wild with these trades, bro. Always. That's Powell. You hear Powell? Was that Powell throwing? Was that a hawk? I'm just kind of joking. But Nasdaq is up. ECB, one of the EC members is speaking. He said the bar for further rate cuts is high. There's a high probability that German growth will return next year. I don't see any arguments that we should do more easing of rates, according to Bloomberg. All right, we're up to my level here. I'm going to short this. There's Powell again. I'd add one more to this. There's 3. Yeah, we're just trying to attack choppiness. Somebody's saying I'm wild in my trades today. I'm really just trying to look for chop. We're ahead of economic symposium, and so I think we're going to get sideways action. It might be big range, though, and, you know, volatile, but I'm trading pretty small throughout all this stuff anyway. I cut one of these. We're mostly flat since the open. Nasdaq, S&P are running though, which I think is odd ahead of this report, unless they know something we don't. Yeah, my risk level here is about 15, so we're close to it now. Yeah, we got to cut most of this. Didn't expect this much bullishness. I don't think anybody did. I think bears are just getting squeezed out. I'm shorting it because I think Powell's not going to say anything optimistic today. I think he's going to say the labor report's weak and inflation is elevated. And I think that's going to cause a negative reaction to it. And maybe this is just shorts getting squeezed out, is what this probably is. You know? Sometimes the market will just do things you don't expect, and that's how it goes sometimes. We're trading still pretty small, all things considered. And so it's not like we're down a huge amount. We're just kind of getting whipped in and out. Yeah. All right, guys. Hey, we got 17 minutes left. About 1,600 here. Almost 2,000. Hey, hit that like button. Hit the subscribe button. We cover every single major economic event live right here on this channel. Hit the notification bell. You know you want to. Try it one time. We do this every day live. Next week, we're covering PCE, inflation, GDP, jobless claims, unemployment, update to home sales, Nvidia earnings, and more. And we're going to stream all of it live right here. So, is this the slowdown? Maybe. We're in one of our other funded accounts. Pretty green here. Where is this? What account is this? What account is this? Okay, this is the middle one. Is it not loading? We're taking profit. I don't know why it's not showing up. We have been this morning, look. All right, guys, 15 minutes. All right, I'm going to cut it right here, break even on the rest. Back and forth. We bounced right here at this 3. Even though we didn't respect it on the way up, we respected it on the pullback. Let's watch 350 above us now. Bulls are in control right now, though, for sure. What is that noise, bro? I hear, I don't know what that freaking noise is. I hear somebody freaking yawn. I don't know where it's coming from. It's got to be an ad on somebody's page, bro. My computer does this yawn noise. I don't know what it's talking about half the time, dude. Yeah, we'll see what we get. Shorts are getting just balled up here too. I mean, we've been shorting most of the morning though. But the momentum's kind of wild. So actually, we just made about $100 short here. Let me make sure the speech. I don't think the speech is out. Yeah, so text release from the Jackson Hole was expected at 10 a.m. Eastern along with the commencement of his speech. Yeah, this is not the speech, but... Y'all ready? NASDAQ rebounding back up. Look, shorts are just getting bought up here. We're actually net green actually now. Not a ton, but net green. All right, guys, 12 minutes left. 12 minutes. Chat, 12 minutes. We're going to stream the full speech live as well as break down the text as soon as it drops. Don't worry. We're going to break this all down as soon as it happens. That's why we get thousands of people here watching this, because we do it quickly. Markets are on hold ahead of this. So, Bitcoin's completely flat on the day. Nvidia is actually up a significant amount. So is Microsoft, but Microsoft's been dipping down for the last 3 minutes. Yeah. Yeah, so I think the markets have been getting baked into a hawkish Powell. 11 minutes, chat. I think the markets are already getting baked into hawkish Powell. We'll see what we get, but I think the markets are prepping for Powell to be more hawkish than expected. Nvidia up to almost 175s right now. Nasdaq's following Nvidia up, I think, mostly. Nvidia is the most heavily weighted stock in the stock market, of course, and so the markets are following it up. But again, we got Powell speaking. The text is going to come out right when the speech starts, and we're going to be able to break that down as soon as it happens. I'm going to switch my headphones out. But remember, the text comes out before the speech, right before it, and we're going to break that down as soon as we get it. As well as we're going to break down what Jerome Powell says during this. Nasdaq's testing highs right now. Look at that. Hey, thank you, Sergio. I appreciate it. Thank you, sir. Appreciate it. Hawkish was good or bad for risk? Bad, probably, but it's subjective and it's nuanced. Could be both. All right, you guys ready? We got 10 minutes. 10 minutes left. Hit the live button next to the play button. Put it in 2x speed for real-time alerts and updates on this. If your computer lags, you might get delayed. So hit the live button next to the play button. Make sure you catch up. Yeah, President speaking, I believe, at 12. 1? 12 or 1. Nvidia trying to go green on the day ahead of this speech. Again, be ready here, chat. The whole market's weighted on this right now. Whole market's weighted on this. Again, the speech is going to mean the most. So hold on 1 second. Let me get this up. I got you guys. Hold on 1 second. We're going to put the text up too as soon as it happens. So hold on. Yeah, we're waiting for them to start this up. Remember, the text comes out earlier. Okay? So remember, the text comes out earlier. Preparing for this now. So we're waiting here. Nasdaq still pushing up, guys. Hey, thank you for the donation, Sergio. Appreciate it, brother. Thank you, sir. Yes, this is live. Hit the live button next to the play button, guys. Remember, put it in 2x speed. Be ready. We're waiting for them to start this thing up. All right, Jackson Hole coming soon. Seven minutes. 7 minutes. All right, guys, we got 6 minutes left. 6 minutes. All right. So today is 8/22, 2025. All right, I'm ready for this speech too. All right, here we go. Markets are really choppy ahead of this report. We got 6 minutes. Are we baked into a reaction here today, guys? Are we baked into a reaction? Are we baked in? Let me know what you guys think. Are we baked into a potential reaction here? I don't know, man. 10 minutes here. 10 minutes. Yeah, I'm putting them up live. We're also going to break down the text as soon as it releases, and we kind of hack the URL, so we'll get it as soon as it drops. As soon as they drop the text, we'll have it. Yeah. So. All right, we're waiting here. Music is quiet because we're waiting for the speech. We got less than 5 minutes. We got about 4.5 minutes left. Again, hit the live button next to the play button, put it in 2x speed. We will be broadcasting the full Jackson Hole speech from Powell, as well as breaking down the text, putting the text on screen as soon as we get it and more. And so watch it live here as it happens. We got about 4.5 minutes left. So, again, long or short, bull or bear, hawk or dove. Let me know in chat right now. Nasdaq's pulling back here. Let's see if it holds 23.5. But yeah, we got all this up. We're waiting for the text to release. And watch for market pullbacks here. All right, let's get ready. Few minutes left. You know, Powell spoke exactly a month ago as well at the Integrated Review of Capital Frameworks for Large Banks conference. Nasdaq's heading down here. We're at 23.3s. So we got some bullish action this morning here. Some bullish action. Not a lot, but some. Look at, we'll put like the SPY up right here. It doesn't really matter here. Let's zoom in a little bit here for this. Still waiting for them to start the Kansas City Fed thing up. But again, we got less than 5 minutes. We got about 3 minutes left. You guys ready? They still haven't started it yet. We're waiting. 2 minutes and 40 seconds. NASDAQ's turning all the way back down here ahead of this. Make sure they didn't publish the speech. Nope. Look for it. Nope. Search for it here. Nope. Still waiting. NASDAQ's coming down though. Focus on the Powell speech. President said he got very angry this morning over foreign policy. All right, guys. NASDAQ's heading down here. Look at this drop. Still waiting. 2 minutes left here, chat. 2 minutes left. Let's wait for the text. Again, the text should be dropping right around when the speech comes out. And we'll be reviewing it all here. It's not out yet. But the text should be coming out right when the speech comes out. So waiting for the text to release here. Although the NASDAQ and everything else is kind of on hold. All right, guys, here we go. We're heading into prime time. 2.5 minutes. Or a minute and a half. I mean, a minute and 10 seconds. Yeah, we're waiting for them to start. They haven't even started the speech yet, guys. Again, so the first thing you want to digest is the text. And hit the live button next to the play button. Put it in full 2x speed if you want earlier. All right, here we go. Less than a minute. Less than a minute ahead of Jackson Hole. NASDAQ has been dipping for the last 10 minutes. Waiting for them to start this up. Let's make sure they didn't yet. Nope, still haven't started this thing up yet, guys. We're still waiting. Let's see if the speech is now live, and they should release it right before. Hit the live button next to the play button. Put it in 2x speed, guys. 20 seconds. 20 seconds. We still haven't started it yet. 5 seconds. All right, here we go. Let's check for the... All right, there's 10 o'clock. All right, there's 10 a.m. Let's look for the speech. Nothing yet. They haven't even started this yet. But no speech yet. NASDAQ is flying up right now, guys. Just on the release of this. Still haven't started by the Kansas City Fed. Looking for the text here. No start by them. They're late. They're delayed. Okay, so here's the speech. I have it right now. Over the course of this year, the U.S. economy has shown resilience in a context of sweeping changes in economic policy in terms of the Fed's dual mandate goals. The labor market remains near maximum employment, and inflation, though still somewhat elevated, has come down a great deal from its post-pandemic highs. Okay, so look, this is what we're reading right now. And the remarks of today I'll first address the current economic situation and near-term outlook for monetary policy. I will then turn the results to our second public review of monetary policy framework as captioned in the revised statement on longer-run goals and monetary policy strategy. When I appeared at this podium 1 year ago, the economy was at an inflection point. I'm gonna put this up here, and then I'm gonna reset this. Still hasn't started. Okay. The economy was at an inflection point. Our policy rate had stood at 4.25% to 4.5% for more than 1 year. The restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risk to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred since outside of recessions. Over the subsequent FOMC meetings, we recalibrated our policy stance, setting the stage for labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges, significantly higher tariffs across trading partners and remaking the global trading system. Tighter integration policy has led to an abrupt slowdown in labor report growth. Over the long run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and where the lasting effects on the economy will be. All right, here we go.
Employment and inflation, though still somewhat elevated, has come down a great deal from its post-pandemic highs. At the same time, the balance of risks appears to be shifting. In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework, as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months, with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage-price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
I'm going to make sure they don't say anything else really important here. But markets are up big, more dovish than expected.
Thank you very much. We'll move into the presentations. So I want to allow a minute for all of the members of the press to go.
Is that it? They're just shutting it down here? Yeah, that's it. They just shut it down right there. Okay, so that is the Jackson Hole speech by Jerome Powell. Again, a couple notes. Number one, on this left side of the screen, it's got all the summaries, like the breakdown of it right here. You can see everything. Again, the text was published, and we were reading the text before the speech started. Okay, we also put a summary on our x.com page at Beginner Trades. Make sure to check it out. We break all of this stuff down live. Let me know what you guys think. Are y'all bullish or bearish on this report? The markets are up big. I ended up saying BQ. I meant NQ here. The NASDAQ, S&P, I think shorts got squeezed. Powell's more dovish than I expected him to be for sure. And look at the NASDAQ. It's up a little bit. He did talk about inflation towards the end. But, yeah, he was neutral. But I would say he, like, rate cut odds, just to look at this since he spoke and the speech ended, rate cut odds have gone up to almost 90% next month. Almost 90% odds of a rate cut. Now, this is all going to depend on inflation next week and PCE inflation and other stuff. But interesting to say the less here. Interesting to say the less. If you haven't already, again, check out Top Step. Great way to learn how to day trade. If you want to learn to day trade, do not fund your own account tens of thousands of dollars trying to look cool. Instead, try Top Step. Most day traders lose money. If you fund your own account, you're probably going to lose. This is objectively true, right? I mean, I'm biased. I get paid by Top Step, but it's genuinely useful because you can get started for $50. You still have some risk, so you're learning how to trade under risk, which is important. And if you fail, you're out $50. If you pass it, $50K funded account for the base one, 90% split. They pay out millions, fund thousands. Top Step X has 0 commissions. Just a lot of reasons to use this and learn to day trade in this way versus funding your own account, which makes absolutely no sense in my opinion. And again, if you want to check it out, I'll put the link up. The link is also pinned at the top of the chat. And again, we're up pretty big. So honestly, what we did here is we shorted this top a little bit into it. I couldn't really show it because I wanted people to be able to see the actual speech and all that stuff. Here's the link right here. Again, they're a sponsor of mine. I'm biased. I get paid by them. Understand CFTC 4.41. But again, I shorted the top up here. We're up, a good bit. We're up about $140, $130. So. Can you explain why dovish sounds the same as always to me? I think right now it's important to understand context. I think this is more dovish than expected. I'm not saying it's dovish, but it's much more dovish than expected. If everybody expects a hawk and we show up basically completely flat, but also he acknowledged that there might be some justification in a rate change, I think that's a dovish thing, right? Powell acknowledging that there might be justification in a pivot is a more dovish thing than expected, I would argue, right? Let chat, do you think that's more dovish than expected? Regardless of what I think, okay, yields are reacting in that way as well. If we take a look at yields, number one, you can see the Fed watch tool up to 90-10 at this point in time. 90-10. If we take a look at yields, which is what the Fed Watch tool tracks here, they're showing yields are down substantially from this report as well, which again, it means the markets are interpreting this as much more dovish than expected, right? Like, look, I just covered news. I don't really have too much of a bias. I mean, maybe I'm top 3 worst trader, wrong trader ever, but look at yields. They're down pretty substantially. Here's 10 o'clock right here. This is 10-year treasury yields, which follow interest rates, right? Yields and interest rates correlate. Here's 10 a.m. We're down since the speech, which again means the markets are digesting this as more dovish than expected. And so, yeah, we'll see what happens, but that's what we got going on right now. Yeah, more dovish than expected. I'm not saying it's dovish. Like, I'm not saying he's super Dove Powell. Dove man, you know. But he's certainly more dovish than expected. I was wrong. You were wrong. We're all wrong. Shorts are definitely wrong. Again, somehow I made money today shorting tops, but yeah. Yeah, PPI inflation, I thought he was going to, and he did reference inflation is elevated. And we are coming back down. Honestly, we're up a little bit. We're not up that much. We could certainly come back down here at this point. Again, if you want cliff notes, there they are on the left side. You can see all of it. Like, look at the left. The left. This right here is summaries of what he said. Okay, bro. Now you're just going to get banned here, dude. Did you ban him? Is the president speaking right now? I don't think so. I don't think Prez is talking right now. Let me see. Oh. Pretty sure he's not. I think he goes live at 1 o'clock is what I think. I don't know, he might be live right now, actually. Hold on, let me check. I'm seeing a couple different people post. Let me check the news. He might be live right now. Hold on, let me see. If he is, I'll put it up. Hold on. Yeah, so he is live right now. He says, well, they're talking about foreign policy, though. Problem is that you got these people that basically lie to you, like these other streaming, like Money Control basically streams like they stream recast versions of old speeches and they make people think they're always live. And so but I think we do have a speech going on right now. Let me make sure. It's hard to tell, like you got to check the channel because some people just send fake streams. But yeah, he's speaking right now. He basically said this. He said, we'll see if the Russian prez and Ukraine prez will work together. We'll see if he needs to be there, but would rather not. The president also said the U.S. is going to monitor TikTok security concerns amid potential American acquisition. He also criticized Comcast over news coverage, claims CBS is under good news management. But yeah, that's basically it today, guys. And so because of this, it's hard to tell what's legit and what's not, because some of these guys are just trying to get news. But yeah, that's the Jackson Hole Symposium. We'll see what happens, guys. Again, an interesting report for sure. Yeah, interesting report. Again, much more dovish Powell than I personally expected him to be. I did not expect Powell to be this dovish. Of course, nobody really did, and so we'll see what happens with Powell, but a very interesting report. NASDAQ's up a lot. I'm going to get out of here and join my weekend. Listen, it's all love to you guys. I appreciate you guys so much. Thank you guys for choosing, me to watch the channel. I try to give you guys cliff notes. Understand, I was reading this before it even started. The speech even started. So I appreciate the love, guys. Thanks so much. NASDAQ is up. You guys have a safe and happy weekend. Be safe. Understand all this stuff on screen. I can't guarantee anything. Again, give me a follow at Beginner Trades if you feel it in your heart to do so. And yeah, check out TopStep. You want to help support the channel. The link is pinned at the top of the chat. Great funded account program. If you want to learn to day trade. It just makes sense. But again, I get paid by them. I'm biased. Understand all the stuff on screen. With that said, rate cut odds up to 90-10 right now. 90-10. See if they're fluctuating back down. Looks like this is getting so much traffic. It's not even loading now. Hold on. Let's try to look how much traffic. I bet you this thing's getting a lot of traffic here. I probably got too many freaking windows up as we speak as well. But yeah. See what we get. Fun times, guys. Fun times. Okay, yeah, 90. So 91 to 8.5 are the odds. So the odds of rate cuts have gone up dramatically for next month. Hey, thank you guys. I appreciate all the love. I appreciate it, Benny. Thank you, man. Carl, Reggie, my guy. You did your job not being right, but interpreting news. Right, that's what I always do. I mean, I try to be neutral on everything. Yeah, 91.5% odds, guys. Hey, I'm going to get out of here. I love you all. Y'all have a great day. I'll be safe. Good luck.